Welcome back to another video of the Alpha Trader. So in this video, we are going to be analyzing volumes. So if you are a beginner, complete beginner, you don't know what the heck volumes are, stick with me. This is going to get extremely interesting. Make sure you watch till the end. So before we get started, here is a quick summary of what is going to be included in the video so that you know what is coming towards you. This is going to be a knowledge packed video. So make sure you watch till the end without skipping like always. So let us get started with the volume analysis video. So first question, if you are a beginner, what are volumes? What the heck are volumes? If you don't know about anything volumes, let me just simplify it for you. So volumes are basically the number of shares that are being transferred at that specific point of time. So for example, if you are looking at volumes on a 15-minute time frame, that means a candle, a 15-minute candle, and the volume data that is being showed that represents the amount of shares that have been transferred, that have been bought or sold uh, on that 15 minutes. So that is what volumes are. So volumes basically tell you how much shares are being bought or sold at a particular point of time. So you can look for volumes on a daily time frame, hourly time frame, 5-minute time frame. We'll get into that further in the video. So now the next thing, why are volumes important? So in my very first video of the channel, this video, so in this video I said that if you want to be on the winning side in the stock market, you need to be on the side of the big players, the institutional investors, because these guys are the ones who have huge amount of money, and with huge amount of money they can obviously control where the market goes. So they can drive the market higher, they can drive the market lower, as they have the huge money. But us as small traders, retail traders, we don't have that much money. So the best option for us is to stick with them, trade along them to make big profits. So volumes tell us that exactly that where the big transactions are being uh, taking place, the where the big institutional investors are buying or selling. Volumes tell us exactly that, and that is why this is important for us, so that we can track the big players, the movement of the big players, and then trade alongside them. So this is why volumes are extremely important. So some of the traders say that volumes don't matter, but in my opinion they definitely matter, and I just told you why they matter. So rest is your decision if you want to use volumes or not. All right, so now coming to the charts. So first of all, if you are a beginner, if you don't know where volumes are being shown on the chart, so below you can see this graph over here on the downside, like a histogram or whatever you can call it, the bar graph. So this is what represents volume. So now as I am on the 5-minute time frame chart, so this one bar below over here represents the shares that have been bought or sold in that particular 5 minutes. So this is what volumes are on the chart. So now coming to the technical part, using volumes as confirmation. So the trade that you are about to take, or the trade that you have taken, how you can confirm that the trade is going to be in your favor by looking at the volumes. So this is definitely one of the most highly reliable indicators. So over here, this is the trade that I took this week on Indian Oil Corporation. So my breakout level was 97, so I was planning to buy this stock above 97 level. So you can see the market opened over here, 9:15 opened, the market opened over here. The first candle, very nice bullish candle with high volume. So you can see, if you see the volumes of the previous day, they were nothing compared to the volume on this day. So you can see the volume spike was there, which told me that there is some buying happening on the bigger side. And then you can see the next candle again, the next candle was another bullish candle, and it had even more volume. So that confirmed that there is definitely some institutional buying, or some high net worth individual, a rich person like Rakesh Jhunjhunwala or Warren Buffett is buying this stock. So this confirmed that there is definitely going to be a breakout above 97 levels. So what I did was I waited for my entry, and then you can see another candle formed. It was still a bullish candle. You can see the long tail over here, and then again a green candle formed. So you can see how low the volumes were on this red candle. This red candle had seriously low volumes compared to the previous two green candles, and then again later the level was broken, 97 level was broken with another high volume candle. And then what I did was waited for the price a little bit, and then I entered at exactly 97 levels. So I will attach the profit screenshot in the video, and then you can see my target was 99 rupees, and then later on my target was hit in just 3 candles. In just 15 minutes I made around 900 bucks, I think. So what did I use? Volumes. So my strategy, support and resistance strategy, simple strategy, what I did was just added the volume factor in that, used volumes as confirmation, and you can see how easily my trade went, how smoothly my trade went. So this is how you should use volumes. So doesn't matter support or resistance, doesn't matter trend line, whether whatever chart pattern you are looking at, even if you are looking a flag pattern or whatever pattern, you should look for higher volumes when the pattern is being broken. If there are higher volumes, then there is definitely a higher chance that the trade is going to be in your favor. So now coming to the next part where you can use volumes to identify sideways markets. So for a stock trader, sideways market are definitely not a very good thing, because you don't have any momentum in sideways market. The market does not go up nor it goes down. You just keep going sideways. So there is no scope for making profit unless and until you are an option seller. So as a stock trader, you can use volumes and identify sideways market. So in this case of Indian Oil Corporation, once again, if you look at the area, if you look at the volumes over here, these volumes, you can see how dried up the volumes are. There is no volume expansion. The volume is stagnant and just is very low, you can see. So that is the reason the market stays sideways, because the big players are not making any transactions. So if the market is left only to the retail traders, only to small traders like us, we won't be able to move the market like the big players move, because we don't have that much capital, we don't have that much money to invest to buy or sell that much shares. So it is pretty obvious that when the high players, the big players are not playing in the market is going to stay sideways. So that is what you need to look. So if you are not seeing any volume expansion, if you are seeing very low volumes in the market, it is better to sit out of the market and either wait for a breakout and look for volume expansion in that breakout. So that is how you can identify sideways market. And when it comes to false breakouts, the next section that we are about to go through. So false breakouts are, so if you don't know what false breakouts are basically when a pattern or a setup has been broken, but the pattern goes in a direction and then reverses back. So it is basically called a false breakout. So you can just use the same logic like I said. When there are very low volumes, you should not enter. So in this case, you can see there is a double top pattern over here in Indian Oil Corporation. So let me just draw the neckline for you guys. So let's say this is the neckline of the pattern, and then there is the break of the pattern, but you can see how dried up the volumes are. So as a trader, if you take up this trade, if you short sell over here, the price will go a little bit on your favor, but then later up you can see how it shot up. So when the volumes are dry, when your pattern is broken but there is no volume expansion, the volumes are still dried up, you should not enter the trade, because it is basically a false, it is probably a false breakout. Because you can see next what happened over here. The volumes were extremely dry towards the downside when the price was going towards the downside, and then later up the volume expanded a lot. You can see how huge the volumes are over here, and then the price shot up. So whoever, if anyone shorted over here, he would have faced a loss obviously. So that is what you need to do. So whenever you see a pattern breaking, whenever you see support or resistance breaking, you need to identify, you need to look for the volumes, what the volumes are doing, whether the volumes are extremely dried up or whether they are expanding as well. So that will save you from false breakouts, and that can also confirm whether your trade is going to be in your favor or not. So now the next part is using volumes to capture very huge moves. So if you can see in the chart, I have marked out where the price goes down and where the volumes go down as well. So whenever this happens, this tells you that the bigger participants in the market, the big players in the market, are not interested in driving the price down. So over here you can see the market opened at here 9:15. The market opened, the price shot up with very high volumes. What does that tell you? That tells you that higher participants, the bigger players, are interested in driving the price higher. But then the price drives lower a little bit, and so does the volume. So the volumes are dried up while the price is going down. So what does that tell you? That tells you that the bigger players are not interested in taking the price down. So the price that is going down, the volumes are very low. So it is basically the retail traders though that are booking profits. So when they are booking profits, they are selling the stock, and that is why the price is coming down. So there is no volume expansion on the downside, which tells you that the stock is going higher. That is the stock is going to go higher in the near future. So the next day you can see the price opens up very strong, really high volumes. The price shoots up once again. So I traded this move as well. I will attach the screenshot. So and if you don't follow me on Instagram, I share all my trades there. I share trading ideas. So if you are not following me, you are definitely missing out on a lot of trading content and as well as a lot of trading ideas. So if you're not following me, make sure you do. I will link it in the description. And later on you can see there is volume expansion as well, and then the price drives lower once again, and then you can see so does the volume drives lower. What does that tell you? That tells you that the higher participants in the market are not interested at all in taking the price lower. And then once again the volume shoot up, the price shoots up, and the price goes up again. And then once again you can see the price is going down, the volumes are going down as well. So this stock might go up in the near future. So let us take a look at some other stocks as well. So over here you can see UPL Limited. So you can see the volume shot up over here in this area, a huge green candle with very beautiful volumes. So you can see the price went up, and then you can see the price is going down in this area. And you look at the volumes are extremely dried up. What does that tell you? The bigger participants are not interested in driving the price lower. And then you can see the price goes up, so does the volume. Then the price goes down a little bit, and the volume over here you can see it is going down. And then once again the market opens, huge volumes in UPL. Once again the price is going down after the huge volume, and so is the volume. So what does this tell you? This tells you that the stock is not interested in going down. And then let us take a look at another stock, looking at DLF. So you can see the price over here, it's going down, and the volumes going down as well. And then later on the price shoots up, so does the volume. The price is going up, and then you can see the price is correcting over here, the price is going down, making a channel. And then over here the volumes are going down as well. So this is how you identify where the big players are looking to take the market, where the big players are interested in. And similarly you can do this on the downside as well. When the price is going up, if the volumes go down there, then it indicates that the bigger players are interested in taking the market lower. So this is how you use volume. This is how you can use volume towards your advantage. Personally, volume has played a very great role in my trading success, in my trading journey. So, and I am sure that volume will definitely help you in your trading journey as well. So if you enjoyed this video, if you like this video, make sure you comment down below. Let me know what you think about this video, and if you want me to make any other video on certain topic, let me know in the comment as well. If you haven't liked the video, make sure you like this video, because I definitely put a lot of effort in making videos. You can see I'm recording at 4 a.m. If that is not enough to make you like this video, I don't know what is. So I will see you next Saturday. Thank you so much for watching.